You heard it here first, and you certainly did. We talked about it when it was 18 bucks. It went to 25. Huge move that. Unfortunately, a lot of people took out the top of that move and didn't use risk management. Subsequently, price action displacement back into this channel. Really good trades here. We put in mostly to help other people with their position management that were en route to put this entry in around 4 bucks, and it got our target in around 750. So potentially you could have managed to trade, got out there, right? That was very possible, depending on your position sizing initially. Then we had this trade, right, which ended up being the ultimate low in around 333. Target on that back up at 410. More than exceeded that. 333 the entry, and it's now boom, up at around 25, spot 20. So just to, because it's Tradespotting, right, and you're used to it by now, it happens all the time. That one, 333, well, I'll take it from 337 because I don't like to show off. That's a 635% move. And that's the sort of thing we're talking about on the show here. So, boom. What else reminds you of that? Well, I had a 500% move on Bed Bath & Beyond. That was similar, but we've got bigger trades with extra digits in them, the percentage moves. This thing's very strong, could go on further. Looking left, you can tell then from that experience that I detailed from the start of the show, there's a significant level of resistance here. Significant. If it does break up, which it could well do, because there's targets in at around 33, then you might be looking for it to there and back up towards 38. After that, risk profile changes significantly. This thing is breaking out. During this breakout, you can see that the volume is as high as it's been since in around June 2023. If it does continue and that volume is confirmation of this breakout, then you could be looking up for it around 40 bucks. If it breaks there, risk profile changes certainly, but if it breaks there, next target's around 125. I know that sounds crazy. I know it does. And then there's even the potential for it to put in another 100% after that. So people will clearly want to be taking some caution because they've experienced something similar before with a breakout, a true reversal formation. You've got harmonic here, you've got an inverted head and shoulders, you've got a breakout confirmed with volume. But subsequent to that, you had a 50% retracement from this high back down to the lows within this formation. And so a lot of people, they're cautious of the potential for that to happen again. If it comes in around here, already at a resistance level, then you're talking about it moves back down to around 12 bucks. This sort of area here, which isn't desperately far away from the top side of this formation, which you have just left. And if price action is to make its way back in there without exceeding this previous high, I make its way back down below $13, then it may well be that it goes as far back down around 767 again, which would be a total nightmare for people, wouldn't it? And then if we put that in context on the weekly time frame, it's really strong on the RSI there. Turn off the drawings so that you see exactly what we're looking at. Same thing together at the same time. Here's the weekly time frame. It's only 3 weeks of intense strength, but 3 tends to, come together. Things do tend to come in threes. And you're looking at the price action here, pushing to the top side, not breaking this important weekly level of resistance. Weekly resistance, weekly support, right? So 3 touches on this horizontal. And there's very few on the root chart where you find 3. And we're here again, creating a 4th one. So it's very, very likely that if you're trading this, you'd be cognizant of that area. And you're looking at the RSI, it's in the overbought territory, and then some, right? And then some. Very extended here. So could easily come back down again. Put that in context, it's literally never been there before, right? It did start making its way back into positive territory, top half of the panel on that indicator. On this bullishly divergent low, you are putting in a positive reaction. Say you, but it's root. Now, we'll be looking at this and you say to yourself, but isn't there potentially this idea of an inverted head and shoulders with a downward sloping diagonal that comes across this guy, and that could potentially be breaking up into a massive reversal formation, targeting those moves to 128 and 250. Is that happening, Spotter? Well, I'd say that's very, very unlikely that you would be getting a sensible trade from that potential pattern, which again, really, if anything, confirms that this horizontal level price action is at the minute is a very strong one, and it may be part of a greater formation, which itself isn't guaranteed to work out. So there is a level of resistance here. You have to be aware of it. And we look weekly time frame, looking left, we saw it to be very, very real. Down at the 4 hour, boom, there is these targets, right? I mean, I can't pretend they aren't there at some stage, you know, but the opportunity cost of being in this is for Donkey's Land. Donkey's Lands. Now, this target, flash interrupted, price action turnaround, 4 hour time frame, down to the 1 hour. We've got a target at 33.12, which takes you back above that weekly resistance. But with price action here pulling back down quite potentially sharply after, see how it happened here in December? You know, you pulled so sharply down on the RSI. Price action obviously bullishly divergent with that indicator, which meant to a period of consolidation and volume dropping down that whole period. Now moving to the top side with increased volume may well be confirmation of a breakout, and that 33 takes you back above that weekly resistance. Zoom. Very majestic price action there. It takes you back above, not this is a confirmation of the breakout because we looked at the volume signal, but this is the weekly resistance here, and as you can see, that white dotted line there, that's meeting this level of resistance right now. At the start of the week, well, you know, bit of volatility. We did talk about volatility, and there's a lot of information looked to with regards to second-hand car market in America, effect of subsidies, and combining that with the capital investment from EV fleets, and then them all reaching the point at which point the fleets are recycling them into the market to raise capital for further investments. They're getting less than they anticipated because the market's overly saturated, in part due to these heavily subsidized purchases in the first instance. And what implications are there for downstream companies in the automotive industry? For example, Carvana, the car company that puts them in actual vending machines, and Root, who they've got a partnership with, and immediately upon being a customer of one, you can get straight into the Root ecosystem. It's very interesting how there's going to be an impact across that market, and I want to see how it works. We were talking about on Discord earlier this morning at pre-market, and a couple of interesting points came up. One chap shared details about the subsidies and the extension for another 8 years. It's going to have huge implications for the automotive industry, so it'd be great to hear your thoughts on that sort of thing. So you're down to the bare bones of the TA here. It's risk management is the name of the game, and it's impossible to ignore this hugely important weekly artifact, which is a test of resistance from below and support from above. Down to the 30 minutes, and we'll get across to what's going on right now. Also flash targets above. All of these are very positive, but price action has rolled out of the overbought strongly into this top side of the panel, still holding it and still in the bullish control zone. Price action still moving to the top side, and I don't like to argue with a bull trend, don't like to argue with price action in the bullish control zone there. Back up to hourly, and you can see that it's just so very strong up here. Price action hasn't gone into a period of consolidation yet, and as such it could be a sharp oscillation down. 30 minutes, that does look like it's bullishly divergent. This is an uptrend. The 30-minute time frame shows you the lower lows on the momentum aren't actually corresponding to lower lows on price action, so more strength pushing it down, failing again. You look at this, you can see there is a horizontal level, 1, 2, 3 touches, all of those putting in resistance. And so when you analyze it, get right deep down into what's potentially a bullish indicator from what we saw in the 30-minute RSI. Actually, when you see that, it's actually the evolution is that's rolling over. And what we're seeing here on the RSI does remind me of a chart formation that Flasher came up with in crypto. I also should notice that was a fantastic contribution to the body of technical analysis from Flasher, who fantastic trader there on Discord, coming up with chart formations. Right, so check it out. You could be like Flasher. So you're looking at this resistance, 3 touches here on the 15 minutes. I'm getting so many warning signs. I'm getting an awful lot of them. Down to the 7-minute time frame, where you've got positive price action back above the center line on the RSI, but you do have this warning sign, this huge warning sign, back down at around $5 spot 66 cents. So it'd be very bad if price action was to go there. 5 minute time frame, you can see this gap. It's quite cavernous. It starts at 11 spot 59, closes at 874. Huge risk then. So if price action, due to the nature of this rise and what we're seeing in terms of the signature and momentum across lower and higher time frames, there's a risk, and the risk profile is changing. If we look left at historical support and resistance, we see it's very significant, and it's on this particular chart highly important at this zone as opposed to any other. Perhaps it's more important for the long-term picture of this chart. And get right down to the tiny time frames, and you see that that same level of horizontal resistance corresponds to potentially 3 tops, and all of that comes with this potential divergence. So if price action on these lower time frames starts getting stuck in the bottom half of this panel, I'd anticipate the momentum being significantly lower and any push down being potentially quite a sharp drop. Obvious targets to aim to means not only have you got these dangerous areas presently where price is, you've also got huge obvious targets below should there be a downturn. And the nature of the price has gone up here without any strong test of support along the way means that it could be a sharp, quick turn down, especially if you combine that with the momentum. So danger en route. I would certainly have my stop loss in profit if at all possible based on previous trade management. I would think it might be, and I would look, if it was with a trailing stop, ideally I'd want that at the minute to be quite close to price action, because there's no point losing 50% of your position in order to re-up down here. That's not trading. You want to make sure that you're managing your risk. You protect your profit that you're in as much as you would any of the initial capital you put in the trade by moving your stop into profit, going with a trailing stop loss, and then taking it at the very least at around $19, and that's already a huge percentage you're giving up. And personally, I'd want it closer to around $22.90, that sort of level, maybe just below. And some people will be looking in at around 19, but you do want to have a trailing stop, follow price action as it moves to the top side. Hopefully, if you are looking like that, you'll be, not hopefully, but if you are bullish, you'll be orientated as such for around 33, 35, 39, and then, like I say, break 39. That really is something. So I'd be hoping for those targets if I was bullish. I'd be positioning for them, managing my risk, aware of the potential for price to turn around, and if it did turn around, how bad it could get. So that is route. Thank you very much. That was a fact request.